Welcome back to the Strong Wealth Podcast. I'm excited for the conversation today with Wayne. We're going to be diving into some more Bitcoin mining profitability scenarios. This is something that, transparently, if you guys listened to my couple episodes ago with Mitch, I'm learning more about myself, and so it's good to always get multiple perspectives when you're diving into something new. And I feel like Wayne's going to be able to shed some great light on, is Bitcoin mining a great investment, and when is it the best time to actually pull the trigger and get into mining. So we'll go ahead and dive into that. But first, Wayne, just please introduce yourself quickly and who you're working for and what you guys do.
Awesome. Yeah, thanks for having me on, Mitch. Pleasure to be here. Long time listener, first time caller, as they say. The company Megawatt, we're founded and based in Indianapolis in the Midwest here. I'm our director of operations. Been with the company since pretty much the jump. We've built the company from the ground up and all the infrastructure, everything vertically integrated. And the reason that we built this company was to create a way for us to mine more Bitcoin. We're all Bitcoiners at heart. So we wanted to build something that was close to home and something that we had control over of. And we've added hosting to that as well along the way to help align incentives with our clients and ourselves so that they can mine Bitcoin, take advantage of the multiple different advantages of what mining has to offer, as well as allowing us to build an engine to help build our self-mining fleet and allow us to stack more Bitcoin right alongside them. So,
I love that. I can appreciate that you put your money where your mouth is, so to speak, where you're mining Bitcoin. You got into this because you were mining Bitcoin personally. And it's not just, oh, we make money off of the hosting fees and whatnot that we charge our clients. We are actually have our own machines right there beside client machines. So I love it. And of course, I'm biased, but I appreciate that you're in Indiana as well. Go Hoosiers. But
no,
let's go ahead and dive in. So you guys have a great Bitcoin mining investment calculator on your website. And to keep this new and fresh, given I just had a mining conversation recently, I want to go through this step by step and play out some scenarios with you. I'll obviously ask a lot of questions along the way, just to clarify some things. But I really want to give people a tangible idea for, okay, they put some money into Bitcoin mining. What could they expect? Because it really is a lot more complicated than, oh, I just put 100 grand into Bitcoin and I watch the price go up and down. They know if they're making money or not. But there's a lot more variables with Bitcoin mining to be considerate of. And that's why it's great to have an expert like yourself to walk through it. So let's go through this calculator together. So this is the very first question that everyone can see on the screen here. What type of income do you expect? And this really comes down, I guess, to the tax considerations. But can you tell me why you guys lead off with this question?
yeah, it kind of goes back to why are you getting into mining? There's a lot of reasons. I think a lot of people that are coming to our website have seen our marketing and realize that we're pushing kind of that tax focus first. I think it's the best way to be interested in mining to get into it. And the difference here between active and passive, as your episode with Arniel goes into a lot of depth. So I'll leave that for people to go back and watch that episode since he does a much better job of being a CPA than I will at explaining that. But there's different treatments and how you're going to approach this from the start. With active income, you're going to probably be more engaged with the entire process. You're going to be tracking your hours. You want to know everything that you're going to be getting into from the start. So we try to lead people with that first. Like, hey, like you should, if you're not aware of what you're getting into, whether that's passive or active income that you're looking to offset, you should probably figure that out first before going into your next steps, since there are different requirements down the road that you'll have to follow.
Gotcha. Yeah, I mean, just for everybody listening, the short and sweet of this is going to be, how, to your point, how participative are you going to be in the mining operation? If you're going to be completely hands off or want to be completely hands off as much as you can be, at least with a hosted mining venture, then the passive income's the route to go. If you're going to be hands on and you would like the depreciation of the mining equipment to be able to offset your active income from a business or a job, then you'd need to go the active route. But there are some substantial hurdles, we'll say, that you need to meet in order for that to actually, um, you know, give you a tax write off. That will lower your taxes in your business or your job. So, like you said, listeners can go go listen to the episode with Arniel to get into the details more so. But does this actually, I guess, choosing the different paths here for the calculator, how big of a difference does this make towards the end as we get to the kind of profitability projections of the different scenarios? Is there going to be a significant difference, or does it really matter which way we go here on the front?
Yeah, great question. I was going to elaborate on that if you didn't ask that. So it's effectively the same outcomes because the way that we're factoring this in is, you're going to get a reduction on essentially, you're using that tax deduction against the capital cost of the equipment. So whether you're doing that actively or passively, the goal here is to figure out what is the tax percentage that you're going to be offsetting, and then, using that as a way to adjust for that capital cost of the equipment upfront.
Cool. All right, sounds good. So I mean, yeah, to be clear, you get the depreciation either way. It's a matter of what is that depreciation actually going to offset? Is it going to offset your active income from the business that you run or the job that you work at? Or is it just going to offset the profits that you make from mining or maybe other passive investments that you might have, like real estate or other things? So let's just do passive income for now, since it doesn't make a huge difference, and we'll continue on here. So,
Yeah.
capital gains tax rate. I mean, I feel like we don't necessarily need to spend too much time on this. We can really pick anything here, but I guess my thoughts on this are capital gains. There's going to be a difference between short term and long term. If it's a short term gain, it's going to be taxed at your income tax rate, and that's why you guys have these other percentages in here beyond just the 0, 15, 20. The 23.8 is including net investment income tax. But just for the people listening, if you're going to sell the Bitcoin in the short term, less than a year, it's going to be the gains that you had are going to be taxed at your income tax rate. Longer than a year, it's going to be capital gains tax rates. So for our purposes, I guess maybe this is good to ask you. What do you typically see? So let's say somebody does do hosted mining with you guys. When now they're mining the Bitcoin, do you typically see them holding for long periods of time? Do they sell the Bitcoin right away to pay their expenses? Some combination. I know you're in close contact with your clients, so I'm sure you've had these conversations quite a bit with them.
Yeah. And we have a very big range of people that mine with us, anywhere from individuals with one unit, on some cases, my grandpa, to public
Oh,
companies, yeah, we have family members, friends, large high net worth individuals, businesses, public companies, like we've got the whole range. So that's why we put kind of these options here and the ability to just type in your own percentage, because it really does vary. Everyone's tax situation is so different. That's why awesome people like Arniel exist to help us figure out, what we're going to end up at tax rate wise.
yeah.
Um, hopefully that's kind of the short and sweet of it, really.
Gotcha. So it's just a wide range, really, of what people decide to do, and it probably depends on how much outside capital they have to be able to pay the bills of mining, um, you know, versus paying it with the Bitcoin that they're mining. So let's just choose a kind of average rate here of 24 percent. It's kind of right in the middle. It's not on the high side, not on the low side. I feel like that'll kind of give us a conservative view. So. All right. How much do you plan to invest? I mean, do you feel like there's a certain number that's best to plug in here, or does it really matter? Um, yeah, I don't know.
Yeah, no, it doesn't matter. The math is all done the same on the back end. But usually we try to get we're typically not a one unit kind of stop and shop. It's not
Okay.
really, there's other operations that kind of specialize in doing that, making mineable accessible for like everybody out there. Um, Not to say that we don't want everyone to go mine Bitcoin, but
Right.
it's just our network, our clientele. We like to be a very white glove service. We like to have a personal connection, like I was telling you. I have a relationship. I know and talk to all of our clients on a pretty regular basis. So typically our investments, we've got people usually starting around like 10 new generation equipment, 10 new generation units. Those go for anywhere from 2,500 to 3,000, $3,500.
Okay.
So you're somewhere probably in that like 20 to 35K range, on your initial investment. these are just quick selectors because we do get people that are coming in, it's closer to the end of the year. They know their tax burden. They know what all of it's going to be, or at least close to it. It's usually a higher number, somewhere from 50 to 100K. So that's why we just kind of put quick selectors. But again, you have that option if you want to put $5,000, if you want to put, $1 million, and you can put that in there and get that optionality as well.
Cool. Let's just go bigger then, 250K. See where that gets us. So you do want to finance operations with Arch Lending. So you guys seems like you're partnered with Arch in order to offer financing for this. What do the financing terms typically look like in your experience, or is this a route that a lot of people go, or not?
So this is new. We've added this recently. Shout out to the team at Arch. We've been working on putting this together for a while. Because previously, for a little bit of context, bonus depreciation, 100% bonus depreciation just came back last year. Before that, it was 100 the first year, and then 80, 60, 40%. And people have always bought the equipment. It's always been upfront. There's been no option to get financing. And that's kind of surprising when you consider other ways of offsetting taxes. One example is Section 179 for a lot of businesses that gets used pretty regularly. If you're going to buy a vehicle, you can go to a car dealership and you can put $800 down or $0 down in some cases if you want, or put, much more sizable, like responsible amount down and then finance that vehicle, but you're still writing off the whole value in that first year. So that's something that we've been thinking about for a while. It's like, how can we add that financing side? Because it really does help some people. It's definitely not for everybody. And I don't recommend everybody should do financing when buying mining equipment. But there are certain operations, some bigger companies, like that's just kind of how they operate. They want that financing side. Um, I said we should put a link to the Arch's page in the show notes, just so that I don't want to butcher exactly what the terms are. I forget they've got a few different options. Most of it is LTV, like Bitcoin backed loans. So if you're sitting on a stack of Bitcoin
Okay.
that's, you don't want to sell because that's going to incur a big capital gains if you've been holding for a long time. You just want to buy miners with mining equipment with your Bitcoin, you can loan against that. And so
Got
that's
it.
a pretty unique strategy that I feel like a lot of people haven't really thought about yet either. And that's now something that's available. I think that's become a lot more popular this year, is a lot of different lending options. I feel like there's been a few companies outside of Arch as well that have started offering some products like this.
Gotcha.
Um,
So the loan is not actually collateralized by the miners themselves, and the profit that they'll generate is collateralized by Bitcoin typically.
Yes, I believe that's their primary lending option. If that link that we'll put in there, we've got a specific one for people that are coming through our Megawatt channels, and yeah, it's going to be a Bitcoin backed loan.
Got it. Okay. All right. We'll go ahead and just say no for now, just to not probably get kicked into that process. So, what's your investment strategy? Maximize dollars, maximize Bitcoin, minimize OpEx. Can you just walk us through these three options and what is most typical, maybe? Want to retire soon, but you're unsure how to manage Bitcoin volatility, avoid selling your stack, and generate income from your portfolio? Imagine heading into retirement knowing that no matter what Bitcoin does next, runs to new highs, drops 60%, or chops sideways for years, you're good. Your income is secure, your stack is intact, and you're not losing sleep over it. That's what Strong Wealth offers retiring Bitcoiners like you. Book a free discovery call today at strongwealth.net to find out what retirement can look like with the right plan supporting it. Go to strongwealth.net. Now back to the show.
Yep. So maximize BTC option here is where you want to get as much Bitcoin as possible. So that means you are paying those monthly invoices with additional capital. So you're going to put the money in up front to buy the actual mining gear. And every month you're paying the power bill on top of that so that you can hold all of the mining rewards. It's another strategy, which is maximize USD, where you're selling all of that Bitcoin. So you want just dollars out of this thing. It's a dollars in, dollars out system. And then there's minimize OpEx, which is where kind of a middle ground, you're going to be selling the Bitcoin so that you can pay for the operational costs and then keep the profit in Bitcoin and just stack that over time. So those are three different options here. We typically see most people, especially our not humongous clients, definitely try to maximize Bitcoin. I think a lot of your clients, a lot of people you've had on this show are probably Bitcoin friendly or Bitcoin native. And so they want to maximize the amount of Bitcoin. They see the value, they're holding that for a long period of time. And that's
Mm,
what most people that I've seen getting into this are trying to do.
yeah. Yeah, I would agree with that for sure. Um, that raises an interesting point though. Do you see a lot of, you mentioned not humongous clients, so maybe these are bigger clients of your guys's. They don't really care too much about the Bitcoin. I mean, they're really viewing this as a maybe a tax write-off and a cash flow play with dollars. I mean, do you see non-Bitcoiners, I guess, making this investment into Bitcoin mining? That's just always surprising to hear from me.
I think for sure now that 100% bonus depreciation is back in play, and this is the question that I've been trying to answer, is like I don't even think you really have to be that friendly to Bitcoin to do this strategy. It's such a great way to offset taxes like dollar to dollar. And you can just do this thing and really not care about Bitcoin. Sell the Bitcoin immediately as soon as you get those payouts every day and just convert this thing to dollars because your goal in the first place was to offset taxes. It wasn't to stack Bitcoin long term. It wasn't to do anything else other than get your tax burden for this tax year to zero.
Mm,
And like I said, there's section 179. There's all sorts of things. I mean, to mention a few, there's real estate. You've talked about that in pretty good depth with a few other people, from what I've heard. There's commercial solar. There's short-term rentals, your Airbnbs of the world.
yeah,
There's a few ways to do it, but for especially like high-income W-2 earners, like this is a really good strategy. There's also oil and gas, investing into that,
yeah.
which is similar to the mining side, but I really just think mining is such a simple way to do it, such a straightforward way to be like, here's what I have left. And it's like after you've kind of exhausted everything else, is the way that I see it, because investing back into your business is a great way to offset taxes. That's what 100% bonus depreciation was like originally brought for, as far as I understand it. And it's like, but if you still have leftover taxable income, using Bitcoin mining as a way to just get that to zero, but also have a cash flow positive asset, right afterwards, it's a
Mhm.
pretty good strategy.
Interesting. I wonder what the economics of comparing the Bitcoin mining investment to a real estate investment would look like. Maybe that's a future calculator for you guys to throw together to get these
Yeah.
real estate investors to not be so in love with buying properties. Because to your point, I mean the at least from what I know, maybe you can speak to this. It seems like the one, the barrier to qualifying for the tax deduction to offset active income, to be specific, is lower with Bitcoin mining than it is with rentals. And then the involvement and just the amount of stress and management and time and energy you got to put in with rental real estate, amount of headaches, that could potentially pop up are, I guess, from what I know, a lot more than Bitcoin mining. Because with hosted mining, I mean, you guys are handling. Do you guys do repairs in house? All that kind of stuff. I mean, what is the well, maybe this is a good point to just talk about what does the involvement look like of the client who is doing hosted mining with you guys?
Yeah. It's, it's a great point. I'm glad you asked that because I'd love to clarify this a lot. I have friends that are interested in trying to get into real estate that have done real estate. My grandpa did real estate basically his whole life.
Yeah.
And I told him about Bitcoin mining, and I've even been up to some of his rentals, way up north. This is up in Wisconsin, and we've cleaned those out after tenants leave, and it's a mess. I mean, it's disgusting. It's really bad. And there's obviously better stories. This is like one of the worst I've seen, but there's people involved. Like people are messy. There's always going to be some friction when you have people renting a house. I mean, we've all been young people rented a house before, especially guys. We're messy, and there's a lot that goes with that. And that's just kind of always been what it was. That like real estate was the best option, like hands down. I mean, it's really just been one of the best options for high net worth individuals to offset taxes. It's a great strategy, but we've just had to deal with the whole tenant side of things. And that's just like become like a known variable. And now there's this other option where you can get the same tax deductions and your tenants are literally designed to just not fuss, not cause a mess, and they just generate, revenue day in and day out 24/7. And, there's some upkeep. We're happy to have clients be involved in that as much as they want, but typically everybody wants us to handle it because we do a good job of it. And it's really not that hard once you have a system and a process in place to take care of this stuff. Um, and I mean, we think it's fun, but the whole point of hosted mining is not having to deal with it to the extent that you want to. Like, you want to hit those hours if you're trying to hit like a goal of keeping on top of the machine so that you can get your deduction. But outside of that, you don't want to deal with it. You want to live your life and do other things and
Yeah.
enjoy it. So that's what we offer. Typically, it's pretty straightforward. If you get the right equipment, if you treat it right, it just runs and it makes it really easy.
Gotcha. So I guess if there, or maybe we'll get to this in the later calculations, but I'd be curious to hear just more about, okay, something happens to the machine, need to do a repair, what that looks like, how often that typically happens, what the downtime is, all that kind of stuff. Um, Sweet.
Yeah.
One thing I will mention just on the tax side of things, the tax deductions that you get from Bitcoin mining and real estate are slightly different in the sense of your entire cost of the Bitcoin mining can be depreciated through bonus depreciation versus real estate. Not the entire cost of the property can be accelerated. The depreciation cannot be accelerated. So you might spend 800 grand on a rental property or Airbnb, whatever, and only 30-40% of that could qualify for accelerated depreciation. Versus you put 800 grand in a Bitcoin miners, 100% can qualify just because of the nature of the nature of the machines, we'll say,
Yeah.
and how the tax rules are written. But again, won't go too much further into that. Or coming back to this choice here, choose how you want to manage mined Bitcoin. I feel like maybe for the easiest or maybe middle ground, minimizing OpEx is probably the best way to go, just because that allows us to not only, you know, get the Bitcoin held that we didn't have to spend on the electricity costs, your guys's, fees, whatever those look like, that kind of stuff. So we kind of get a blend of both, where we actually get to view apples to apples of the investment on how it's performing by itself versus because this maximize BTC option, effectively the expenses are going to have to be paid from other capital. And so that's probably not going to be factored in as well as if we do the minimize OpEx option. Is that fair to say?
For sure. Two things I'll highlight is
Okay.
one factor to come into play is, how do you see Bitcoin performing over the next 2-3 years? Everyone's got an opinion. As we've talked about, a lot of people are not right, but everybody has an opinion. Especially now, Bitcoin's been down. I'll be the first to talk about it, but
Sure.
that's one thing to factor in, right? Is if you're getting into Bitcoin not necessarily as much or, maybe equally as much as the tax side of it as you want the hard asset, the underlying asset. And this is a way to convert dollars to Bitcoin, which is like, that's what Bitcoin miners do. If you want to simplify the whole process, they're machines that you put dollars in and you get Bitcoin out. So kind of the easy way I like to explain it. Um, you have to account for the appreciation of value over time. So if you think, 3 years, Bitcoin's going to double, triple in price, maybe you do want to maximize for Bitcoin because that's going to double and triple in value. And if you're minimizing your OpEx by selling that Bitcoin, you lose out on a lot of those, tail end rewards down the road. So that's one thing to factor in. The great thing about this calculator is you can run it as many times as you want and compare the results side by side.
Yeah.
Um, and then that was a big one. I think I said both of my points at once, so I'll pause there.
Cool. Sounds good. Yeah, maybe we can just get through both if we have time and see what the differences are. Let's start with the minimize OpEx then, and then we can always come back to the maximize BTC and see what the differences look like. Investment time horizon. I think maybe the best choice here might just be the life cycle of the initial machines that I buy. So let's say that I buy the latest machines that you guys have. Um, What does the typical life cycle of those look like? I mean, are they gonna be profitable 5 years down the road? Is it gonna be done in 2? Is it really gonna work out to 10, or is that, a little crazy?
No, that's a good question. This is one that I've been spending probably some of the most of my time trying to figure out. It's super important for us with the equipment we buy for ourselves and for our clients.
Mhm,
And to give a little bit of historical context here, Bitcoin mining kind of just came out of like the Stone Ages. We used to be, I mean, some of the mining setups 4 or 5 years ago were OSHA nightmares. It was just crazy stuff you'd see out in Texas, all these crazy guys just trying to wire containers up and just get hash rate online because some of the booms of 2021 and stuff. And we've made a lot of leaps and bounds though. To get a little technical, like the photolithography, like the actual nanometers of the chips, 2 nanometer, 3 nanometer, 4 nanometer photolithography that we see in like today's iPhones and like a lot of like really high end NVIDIA chips and all this stuff. All that the top end electronics use these really low number 2, 3 nanometer photolithography. And we're now seeing Bitcoin mining chips that use it's the same silicon. They're catching up.
mm,
And where I'm going with this is that over the last 5 years, we've seen leaps and bounds in efficiency of the machines. And that caused the machine, you'd buy an S19J Pro, came out like 2020, early 2020s. Um, Everyone expected that to last like 5 years in terms of profitability. Bitcoin was running up, all this stuff, all these models that you were running back then. But then, 2, 3 generations of machine would come out and it would be like almost obsolete. So there was these crazy leaps and bounds of like 50%, 70% efficiency gains that we were seeing at the silicon level that were not being factored in. So just looking back on that historically, I'm like, this needs to be a part of like how we're factoring for our business and how we should be advising our clients to really factor that in.
mhm,
And so that silicon advancement has slowed down a lot. We've caught up, essentially, is where I'm going with this, with all of today's modern photolithography, and at the silicon level, we're caught up. So we're seeing smaller leaps and bounds, and I think that that is going to cause the lifespan of these machines to be longer. How
mm,
much longer, I can't say. The machines physically, in terms of a maintenance level, especially, we've been working really closely with MicroBT. You can probably see that from some of our marketing. They've been great. They're kind of known in the industry for being just like the workhorse. You can put them anywhere; they just run forever. And we've seen that, and they've continued doing that. The trade-off with them compared to some of the competitors in the market is that they weren't as efficient. So people would run a model, and you've got, on paper, this machine looks better. I won't say the name of the company, but um, it would have issues. It would have, maintenance stuff and problems which you're not factoring into your model. So you're going to end up
mm,
getting a worse ROI because, some percentage of the equipment failed versus if you work with like some of these WhatsMiners that we use, there's almost no failure rates. It's very low. It's like 1% in like some of the latest batch units that we've got, like super low. And if they do go out, the after sales service with the manufacturer is super fast. They're talking like two
mm.
weeks, 3 weeks. You've got either a fixed or a replacement machine back on the rack hashing. So it's much better. And so all to say there's a few variables to factor in there. It's like for this, I like probably 3 years, I would say, because you're factoring in where's Bitcoin going to go, where's the network hash rate going to go, and then if we've got all this AI competing for electrons in the grid. But I
Mm.
would say, I mean, the machines physically will last as long as you treat them correctly. We've got machines from 2020 that still hash right next to a brand new generation equipment. So it's really the profitability that is your biggest X factor in
Mm.
terms of how long that's going to last. And that comes down to how you want to model this out, which is again why we built the calculator so you can try to figure out what makes sense to you.
Got it. So it sounds like, if I'm understanding you correctly, that there are different types of machines, but different manufacturers, I guess, and maybe some manufacturers might optimize for durability versus some might operate or optimize for efficiency. Maybe is the right word to use. I don't know. Correct me if I'm wrong, but how does that play into this decision? Then I feel like you've hinted at it, but if you had to really give us maybe if you compared two brands or maybe what you guys use, it sounds like you use WhatsMiners. You mentioned I think you said SJ19 Pros. Was that the name of them? They were in 2020, maybe that. Um, I'm not familiar with all the brands, to be honest with you. So maybe just give me a comparison really of like the trade-offs of choosing different machines and how that might affect this number here that we're plugging this into.
Yeah, there's pricing, there's availability, there's track record. Um, Something that I'll highlight that I think is important that we do is we try to get large batches of the equipment kind of ordered ahead of time. And we get it delivered here in the US where our facilities are operating. Something that a lot of people don't factor in if you've never been in Bitcoin mining before. And we've learned all this stuff. We've kind of done all these headaches for you, which is the benefit of hosting.
Mhm,
Is, some people will see the price of one machine and it's a bit higher. Like say we have a hosted machine, we're offering it, it's maybe like a few $100 higher than like a competitor. Bitmain is like the biggest mining competitor in the space. And it's like maybe cheaper, but like you order that Bitmain machine and from some of their track record, there's a maybe slightly higher chance that it has, some maintenance you have to deal with down the road. But also a lot of those are coming, directly overseas still. They're not factoring in the shipping, the customs, the delays that it's going to take to get that machine to the site. So what
mhm,
we try to do by just partnering with the manufacturer and some other partners directly is just get that stuff in-house, get it tested, get it ready to go. And then that way when our clients buy, they're paying a little extra, but they're paying for all that legwork we put in to get everything here in bulk. So we're getting a big discount on all the shipping and stuff,
mhm.
getting it tested so that when you pay day one, like everything's going to work. That's something that a lot of people don't factor in, a lot of people don't talk about. That's, I think, a big reason why our network, our client base has been as happy as they are. And because things just kind of work once they get going.
Got it. So what's the typical turnaround time then from say I send you guys a wire of 100 grand, 250 grand in our example here. When are the machines actually going to start spitting out Bitcoin for me?
As soon as the payment's processed, like that night, we'll turn it over, point them to
Really?
you. So as long as you've got your wallet set up, everything else is ready to go for you to receive the Bitcoin. I mean, we can turn it around as quickly as possible. It's the cool part of everything that we own being built by us, vertically integrated, is that everything is really fast. And like I said, with us being very white glove, like very hands on, you literally send us an email like, hey, payments initiated, payments sent, here's confirmation, like it's done. We'll like, all right, here you go, we'll point the machines to you, and you're online. Makes it really
Mm,
easy. It's very transparent.
pretty cool. I like that. Yeah, so I guess back to the original question of the different machine trade-offs. Is there something that you could speak to shortly there as far as like what are the maybe two or three most popular options, or maybe just what you guys offer and the trade-offs between the different brands or types of machines, or maybe you only offer one type? I'm not sure.
Yeah, we've always wanted to give our clients as much optionality as possible. We will. I personally, because I have a lot of these conversations with our clients, will kind of guide them in one direction. And I'll give them all the facts of why, data to back it up, testing we've done to prove what I'm saying. But there's really a small handful of major players. Bitmain's biggest by market share, followed by MicroBT. Then you've got Bitdeer, which is a publicly traded company. They do a lot of self mining as well. Kanan, however you want to pronounce it. A lot of people still have some teasing over it, but they're, I think, one of the original ASIC. They were the first ones to market. They're still in the game pretty heavily. They've got pretty good units. And we give people optionality. We point them in the direction of WhatsMiner. That's currently our favorite. It changes. People come out with a different generation. Sometimes it's great, sometimes it's not. Our job is to get that stuff, test it, work with those manufacturers to make sure that what we're offering is best. So, there's not like a perfect solution in terms of like knowing the future, but we do as much as we can to test and make sure that what we're offering is the latest and greatest, but also reliable and going to last you, a long time so you can actually get the ROI. That's something like our calculator is modeling out.
Got it. So you guys lean towards the WhatsMiner. I've heard that those are more reliable, less repairs needed, higher uptimes for hosted miners. So is that why you guys lean that way? And is it true then that the trade-off is okay, this is going to be more reliable, so it's actually going to be working for me, more consistently, but it's maybe I don't know if less powerful is the right word. How would you phrase it? Is it less efficient, less powerful,
Yeah.
or maybe that's not true at all?
It's the efficiency. That's what you look for. So it's
Okay.
watts per terahash, sometimes joules per terahash. It's the same metric essentially. It's how much energy does it take for me to get Bitcoin out? How much energy per Bitcoin, per Satoshi that you get out essentially. So the more efficient, the lower the number. Right now, like that the WhatsMiner on this model that I can show you in a little bit once we get to the end here
Mhm.
is the WhatsMiner M70S. It's the latest machine that they've announced and released. It's 13 watts per terahash. So it's just how many watts per terahash. It's a like 200 and I think 46 terahash machine. So you multiply 246 times 13.5 and you get the total wattage of the machine. A little technical, but that's what it is. It's the efficiency of the machine that matters because that's what ultimately is what dictates the profitability of the machine.
Sure. Yeah, but okay, if you have a machine that's maybe a little more efficient, but it's down, 5-10% more than the WhatsMiner, you have to weigh those costs as well. So sounds like you guys favor WhatsMiner overall. Cool. So that'd be 3 years then still with your WhatsMiner choice, or would that extend at all with them being more reliable?
Yeah, let's do 3. Let's say just because like the market who knows where it's gonna go. I like that's a good middle ground. Could be 4, could be 2, could be 5, probably not 1 for sure. I think 3 is a good middle ground. That's kind of what we've seen in the past. The machine,
Okay.
fortunately, will still be usable, workable, run fine. So there is an aftermarket that you could sell those on afterwards. So it's not like the machine's just dead in the water, a total write-off, that's worth nothing. It's just the profitability of the machine that is what's gonna dictate kind of that lifespan.
Got it. Okay. Cool. Sounds good. So there is some recoup, at the end, being able to sell those.
Oh, yeah.
You guys buy them, or how does that work?
Yeah, so we'll offer them. We try to work with our clients if we can buy the equipment, make them an offer that's fair on market pricing. Just because it's easier in house. Like all this stuff is physical, like building sites is physical. It's hard. Moving mining equipment around. These things are heavy. They're dense. So it's easier for us if we can buy our clients older equipment and we can mine with that, or we can find a good home for them. We try to do that. We'll also help them put that on the market, find a different buyer for it if that's the best way to go about it.
Cool. Awesome. All right, so we'll do 3 then. When I was running through this initially, I found this interesting here. So this upgrade package, it says annual miner upgrades to offset difficulty increases and boost returns. When we're talking annual miner upgrades, is this like a new machine, or what is this? What is
Yeah.
this?
So this is the annual upgrade package. And again, totally optional. It's just kind of to get people thinking about what you could be doing. Is if I just bought new What's Miner M70s, these brand new units, um, and I'm doing that to offset a tax gain. I'm probably going to have a tax gain next year. So like, okay, well, I might want to upgrade. Okay, so why should I get this specific unit? But ideally, that upgrade package, at least in my mind, some of the guys on my team might have a little bit different answer, but like it's because you're doing this for those tax purposes. And so next year, you're probably going to have a tax gain
Mm,
again. If this is just a crazy outlier year, your business did really well. You just made a lot of money for some reason. Maybe you bought like, Anthropic stock or something like that and you have a big gain, like maybe then you just skip the upgrade package. You just have this that you need to offset. You're going to buy this fleet one time. You're going to ride that into the sunset. That's totally fine too. But this upgrade package is because again, like we are focused on the tax side of things. So that's kind of how we market this business because I think it's the best way to go about mining in a hosted sense.
sure.
So we usually recommend that upgrade package for that reason. And the machines typically have the best resale value if they're the newest generation equipment. So there is a bit of like a beta on the latest generation equipment typically has the best value.
Got it. So this is actually like a reinvestment in the latest tech that you guys are offering. So I guess what is the benefit versus maybe I said no, I skipped the upgrade package, but then next year I do want to buy new miners. Um, I mean, is there any difference there if that is how the scenario plays out, or I guess which should I choose here?
You're saying the same thing essentially. Let's stick with the upgrade package just to kind of see what the numbers pull out. But
Cool.
if you said no and then change your mind later, it's not like you're locked into something today. It's
Got it.
just the upgrade package is the idea of buying the latest generation equipment today with the intent to sell that equipment on a secondary market. Will help you facilitate that, but then put that cash back into whatever the latest generation is at that time. Probably one generation above that. It's starting to move a bit slower, like we were talking about earlier. But that's the idea. It's not like a locked in thing today that you have to decide about. It's just to get you thinking about how this might work for you down the road.
Got it. All right. All right, a market scenario. Obviously, this is probably one of the biggest variables if I had to guess as far as what's Bitcoin going to do.
Not a question.
Which what's that?
$1 million question. Yeah.
Right. Um, but let's just think through kind of right now where we're at. I mean, here we are, 65,000. We're in the middle of a bear market that wasn't supposed to happen. Um, how long will it continue? If we just look at historical market cycles, maybe through this fall, and then we get back to the bull market, things start to turn around. So let's assume that things play out exactly like they have in the past, and we kind of go through this cycle here. We're down through the summer. The fall is where things finally start to turn around, and then we go into a bull market again. Um, which would I be choosing here then? So you're saying mining bull market is high Bitcoin price growth, appreciating faster than network difficulty or hash rate. Okay, that might be the one we choose. The base case is balanced market conditions with aligned growth. Is this kind of moving in parallel then? The price and hash rate, is that what this is
Yeah.
assuming?
Because it's really, it's, it's a little bit niche, but like the mining difficulty. I think some of the people we've had on talked about this before, and the price play hand in hand.
Yeah.
Mining difficulty is just how much Bitcoin your machine is generating. If more people start mining Bitcoin tomorrow, your machine generates slightly less, uh, respective to the amount of people mining Bitcoin on the network. If people leave, like all these public companies have been leaving, like their tails are on fire to go do AI HPC, that means your Bitcoin machine generates more. And we haven't had a high in difficulty. We've been in almost a difficulty bear market, I'll call it, since
Mhm.
like October, since we had that Bitcoin high, just because the mining, kind of incentives have been slow. As we've chopped along, we've come down from our high, and we've been sitting in this 60 to 80K range for the last few months here. So all the miners, some of them are super price sensitive, some of them are not. To just last night, we had 3% of the network come offline. I just tweeted about that this morning. In the last 10 days, a total of over 9% of the network has come offline. So that means our
Yeah,
clients that are mining Bitcoin today are going to be 9% more profitable if this network difficulty adjustment stays for the next couple of days when it hits.
got
So
it.
to circle that back, mining base case is just you're seeing Bitcoin price, network difficulty change percentage wise at the same rate. Bull market means Bitcoin price is outperforming difficulty. Bear market's the opposite.
Got it. Makes sense. So I guess if we assume cycles play out like they have in the past, what do you feel like is the most appropriate to choose here? I would guess bull market, but we don't really see the bull market happen for another possibly year, when we really get into the thick of things. So is that still fair to choose? I mean, we have our 3-year investment time horizon that we chose. So we would expect 3 years from now, Bitcoin probably is substantially higher than where it is today, hopefully. But what are your thoughts as we're going through this?
I try to stick with base case. I don't like to play the prediction game. It's one that I feel like is perpetually losable. So I
Right.
stick with the base case, especially when I'm showing people and just walking people through it, just because I think it's the most fair. I don't
Okay.
know what's going to happen. AI is a total monkey wrench in this whole thing. I think that's why we're seeing Bitcoin price changing a bit today. But I'd stick with base case for now. If people want to see it, again, it's on our website. Come back, play with the bull market, see what it looks like. Play with the bear market, see what it looks like.
Yeah. All right. I appreciate that conservative perspective. All right. Continuing on then with the base case. So we've got some additional stuff here. So Bitcoin price looks about right where it is right now. Bonus depreciation, 100%. I mean, this is going to apply, at least this will offset the Bitcoin profitability, of the machines at the very least. So I feel like that's fine to leave. Um, Electricity costs, is this about what your guys' rate is? 8 cents per kilowatt hour?
Our rates are as low as 7 cents on the flat rates. We've done
Okay.
rev shares in the past too to get people lower. It's a band. It kind of depends on the equipment, the size of the equipment. We can give people discounts for larger operations, just good economies of scale.
Got it.
8 is usually kind of where a lot of our base entry clients, because a lot of people, like our CEO did in the beginning, want to kind of test the waters. They're going to do a few units here and there, small stuff, just to test the service, test everything like that. That's perfectly fine.
Yeah.
That usually puts you in kind of our higher tier, which is why we put 8 as our model, but work down to 7 once you start scaling up.
Cool. Got it. For the pool fee, explain a little bit about what that is, and is one a standard assumption?
Yeah. So for us, again, going back to what I said earlier, like we give our clients optionality in pretty much everything. You can choose whatever pool you want because the cool thing with us is you pay us per power, but that's really it. That's your cost. The Bitcoin is not touched by us. It's sent directly from the pool to you, wallet of your choice that you set up. We've got partners to help you set up a wallet if you need that, but it's yours. We don't touch that part of it for a lot of reasons. And so
Yeah.
we typically, like we've done with the mining equipment choice, guide people to what we think the best option is. We currently typically roll with Ocean as of lately, just mining is profitability based. They've been the best that we've seen from a few different tests. I've got a test example with some data that I can give you to put in the show notes if you want that as well.
Sure.
But their pool fee is 1% if you run their datum node, which allows you to just create your own block templates, which helps
Yeah.
decentralize the network, which is a good little thing on the side. But that gets us to a 1% pool fee. Most of our clients opt to that. We've worked with a few other pool
Yeah.
operators, but that's just, it's been our favorite. It's been our client's favorite. We tend to stick with that. That's why it's 1%.
Cool. Got it. So, you mentioned that really what you guys are making money on is the power. So you guys essentially make money on the spread of the power costs, and then, if I'm hearing you correctly, also the spread on the kind of upfront legwork that you guys do to get the machines in house to make the turnaround time uh, almost as instant as you really can. Is that fair to say? So the spread on the machine in the spread on the power costs is where you guys make your money?
Correct. Yep. And
Okay.
we really emphasize it on the power cost because that keeps our incentives most aligned. If you're up, we're making money. So our goal is to keep you online as long as possible and as much as possible.
Makes sense. Maybe that points to another consideration then. Is the hosted client, are they able to turn it on and off at will?
That's a good question. So this is one that we get a bit. We give our clients, we've got dashboard as well. Log into that, see all your equipment. You can see pretty much everything you can think of about the equipment, way more than most people need. That said, we usually don't give people the option to turn things on and off, and here's why. It's a bit technical, but at our sites, we have load obligations to the grid. We participate in demand response, which is a program where, because Bitcoin mining has a cool, unique skill where you can shut it off in about a minute, we can shut the whole site off, many megawatts, many neighborhoods worth of power. When you get winter storms like we had back in January or summer heat waves like we'll get maybe in July, the grid gets stressed. So we shut off for a few hours at a time during those peak hours of the day, somewhere from 3 to 5 o'clock in the afternoon, and we release that power back into the grid. So we have some agreements with our
Right.
utility. That's what allows us to help sometimes get our rates down. Sometimes it's just cost avoidance, which allows us to give our clients a good pass-through rate, much cheaper than what they could get at their house.
Yeah.
And so we don't allow people to control the power on things because there's a lot going on the power side. It can get very complicated on the back end.
Right.
That said, if our clients ever want to pause the mining fleet because for literally any reason, we give them that option. They just email me or email someone on our team, and we usually pause a month at a time, kind of billing period to billing period, or just a month at a time. And they have that flexibility if they want to turn the equipment off. But the instantaneous stuff we try to handle just because there's a lot of complexity built into the back end.
Got it. Got it. But you guys do allow the ability to turn it off and on if they want to.
Yes.
I gotcha. Okay. Cool. Maybe that's where the expert parameters can come into to play here. So
Yeah, a
BTC
couple
growth.
things here. I can walk through these if you'd like.
Yeah, let's do it. Yeah.
Yeah. So the minor annual value depreciation, that's basically what you believe and that's what our estimate is at 40%, the value that's going to depreciate over time. So let's say you bought it for a buying machine for $1,000. If it loses 40% of value, it's worth $600. Right. $1,000 is what I
Got
said,
it.
I think $600.
Yeah.
So that's just year over year, what that's going to depreciate in the price on for a resale market.
Got
So
it.
you can kind of calculate what do you think the value of the equipment's going to be worth if because right, you're going to want to sell this equipment and put that into a new generation fleet if you chose that upgrade package um, each year. You're going to be doing that. So that factors into that. And then there's just economics on the actual mining equipment, the hash rate of the individual machine, power of the machine, and then the unit price of the machine. And that's all those are.
Got it. Okay. Are these pretty reflective of current conditions then, I'm guessing?
Yes, yeah. So all the mining equipment, all that stuff's up to date. That's like a real machine. And then
Cool.
BTC growth rate, BTC or difficulty growth as well. Those are set based on the case that you chose. So you chose base case.
Yeah.
So it's 35% Bitcoin growth year over year, 35% difficulty growth year over year. And you can adjust those. This is where it gets really cool because we kind of quickly put everything in earlier. You can really just granularly adjust to exactly what you want to see.
Yeah.
And then on the next page, you'll get those results.
I love it. All right. Awesome. What is, so obviously BTC growth rate people can find, and they can find difficulty growth rate too, but nobody's talking about it. Everyone's talking about the Bitcoin price cager and up down all around. So I feel like people probably have an idea for what they would want to see here, but the difficulty growth, what does that look like historically on the network?
Yeah, we put it at 35 because that's kind of, I believe, been the year-over-year growth rate over the last like 5 years. Don't
Okay.
quote me on that, but I'm pretty sure that I remember when our team was building this was the number we kind of came to. Um, so that's what we put there. Bitcoin difficult or Bitcoin price growth rate, kind of same thing there. There's a lot of different opinions on Bitcoin growth rate, but the difficulty growth rate, it's pretty easy to do the math on that and see that. So um,
Yeah.
the cool thing though is like I was saying earlier, we've seen kind of the first ever dip. It's almost always been up to the right. People haven't stopped building new infrastructure for Bitcoin mining for the last, I mean, since it started, since CPU mining, back in 2009 when Satoshi and
Right.
Hal Finney were sending Bitcoins back to each other and mining 50 Bitcoins per block. But I think that the AI and HPC world that's come into play now, there is this dilemma that every CFO of every public, energy infrastructure company runs into. Where it's like, I've got $1 here and I can either put it into Bitcoin mining or I can put it into AI and HPC. And the returns on AI and HPC right now are just, bazooka level. It's insane.
Yeah.
So we're seeing a big capitulation from public miners switching over to literally just unplugging Bitcoin miners and plugging in, NVIDIA H100s or whatever. And so
Right.
we've seen a drop in hash rate. Who's to say that'll continue? Right now, we're, like I said, estimated for another 9% drop in the entire network difficulty, just
Yeah.
9% of the, mining hash rate coming offline.
Uh-huh.
I'd love to see that continue because that's relief for miners. It makes the economics better. Every 2 weeks it adjusts and you can follow it along. It's super transparent. It's kind of cool to watch. It's like watching the network live and breathe.
Yeah, no, that is cool. And yeah, the AI thing is interesting. Yeah, I see. I could easily see AI being a tailwind for Bitcoin price, but a headwind for hash rate
Yeah.
growth over time. Just because what you're describing here is okay. The bigger players in the space, they are rewarded for short term profits, and they're going to go to where the money is. And if that's in AI, and I just don't see that slowing down anytime soon, to be honest with you, just because the demand for energy is extremely high compared to the supply in the United States. We haven't built out the energy infrastructure like China has over the past 20 years. I feel like we've kind of gotten lazy a little bit. um, and now we're like, oh crap, we got to catch up. And so if the AI race continues to play out over time and it is as impactful as what people think that it can be as far as how it changes our world, I could very easily see the demand for power still going to AI for the foreseeable future for quite a long time until we get an excess of power generation in the infrastructure around the United States at least. Obviously, people mining elsewhere. It's not just mining in the United States. So I don't know fully what that looks like, but at least here locally, that's kind of what I see. And then, the tailwind of AI being, or on the Bitcoin price, just being the, deflationary aspects of AI offsetting jobs. If Bitcoin or if AI really does replace a lot of white collar workers, all of the sudden that the burden of funding their lives is going to fall on the government because they're unemployed now. And so then all of a sudden we see, government expenses go up substantially beyond,
Yeah.
what they already are. Now they're printing money, here we go. And money printing is good for Bitcoin price. So I could see this really working out well for Bitcoin miners like you guys. And the little guy in this being a wonderful time to get started in Bitcoin mining. Obviously, that's not a guarantee, to your point. And so, but I feel like at least there's potential there, and we're seeing it play out in real time based on what you're saying. Where okay, the bigger players, maybe the public companies, are diverting their power or their capacity to AI instead of Bitcoin mining, and that's why you're seeing the network difficulty substantially decrease over the last few months. Maybe it's a little bit longer. I'm not sure.
Yeah.
Um, but yeah, I mean, I don't know. I could see that. I mean, do you see that as well? It sounds like you do from what you're describing.
I think there's some really good headwinds. Obviously, I'm biased because I run operations at a Bitcoin mining company, so I try to
Sure.
hold my tongue a little bit. But when given a great opportunity like that, yeah, I think you're 100% right. Like all of the compute is going towards AI and HPC. That's bullish because it literally makes your machines more profitable every 2 weeks as that hash rate leaves the network. Bitcoin price, unfortunately, I think we're seeing a bit of that liquidity exit because we've got three enormous, like groundbreaking IPOs coming up from
Yeah.
SpaceX and OpenAI and Anthropic. But another interesting thing, like just as a factor before you hit the calculate button, is like strike while the iron's hot. We've got, Trump brought 100% bonus depreciation into play in his first term, and it was 180, 60% that lowering schedule, and now it's indefinite, at least for now, as of the big beautiful bill from last year.
Yeah.
So who's to say that the next administration that comes in won't change that and remove it again like they did last time? Um, so, you've got at least 2 years where this is available for you to take advantage of that bonus depreciation. Um, like I said, strike while the iron's hot. And I think there's a lot of really good headwinds for Bitcoin, the difficulty going down, the price going up, and that's Shangri-La for Bitcoin miners. That's what we hope for.
Well, I hope so for your case. That'd be good for everyone who owns Bitcoin as well, but it could be better for Bitcoin miners. Just on the profitability numbers that I've run around it. So
Yeah.
we'll see what happens. Obviously, you have to have these factors play out as we think that they could. Right now, to your point, AI could be a headwind actually for Bitcoin price, but I feel like that's potentially just short term. We'll see. I
Yeah.
know this is not a podcast about short term Bitcoin price action, so we won't go into it. But it's an interesting development that I don't think was really a big consideration
Yeah.
to 1-2 years ago, but now it's kind of like right in front of everybody, and it may be a really good opportunity for Bitcoin mining. So let's
One
go ahead and hit. Go ahead.
I was gonna say one last cool thing to maybe consider too is the
Yeah.
competition, one at the energy level, because so much compute is required for this stuff, and at the foundry level too. There's only so many foundries. You can only print so many wafers a day. These Bitcoin mining machines use the same silicon that all your AI compute, all your cell phones, all your vehicle, Apple CarPlay chips use and stuff like that.
Mm.
Um, so I think the US is doing a lot of work to build out more compute, more foundry availability, but maybe that becomes a bottleneck, maybe just something to think about. And that makes your equipment that if you purchase today and then we get less and less equipment on the market, that makes it more valuable on the resale market. So just another
Mhm.
thing to think about.
That's a good point. I mean, to your point, the efficiency curve has it really accelerated, you said, in the last 5 years, but it might slow down substantially as people are focusing on AI rather than Bitcoin. So that makes the life cycle of your machine last longer and be profitable longer.
Yeah. Yeah. There's an
And so,
asymptote in that efficiency.
yeah, exactly. um, which is interesting as well. And so, if there's not the development going into the Bitcoin mining, it's going into AI, and the focus is on that. It really does create this kind of interesting dynamic to where it's really helpful for both sides, assuming that Bitcoin's price is not also held down by that headwind. But I don't see how that happens for a long period of time. I think it is happening right now, but we'll see.
Yep.
Anyways, let's go ahead and calculate this then and see what happens. Hopefully, we didn't create something that it's not a go. There it goes. I just had sat here for so long. So let's see what we got here on this the profit numbers. So let's walk through this, I guess, what we're reading here, and then we can look through the year by year performance also. So the tax savings, we did the 250,000, and that's giving us this bonus depreciation or depreciation benefit of 59,580. So is this just the 250K deduction at our tax rate of 24%? I think is what we chose, and that's how this is calculated. I'm guessing.
Yeah, I think it was the 20, whatever the 20 something percent that you picked. That's
Yeah.
the bonus depreciation on that capital cost of the equipment.
Yeah, makes sense. All right. So total capital expenditure is this. This is the initial investment in the machines, and then over time, the power costs?
I'm not seeing your mouse.
Oh, sorry, the CapEx here. Oh, this is just the initial investment in the machines then, the
Yeah,
248.
CapEx is just machine purchase. Yeah, because if you
Makes
if
sense.
you think about it, you put 250. So this just rounded down machine
Yeah,
wise. So whatever the number, you can see that down below here, but that got you as close to 250 as possible with the current machine pricing in the model.
makes sense. So, okay, here we got at the top here, we bought
Yep,
77. If we would have 78, it'd be over 250, so
correct. Yep,
got it. Okay, cool. So we got 77 miners. That would feel pretty cool, I'm sure. Operating
big
costs. So
fleet.
this is what's that?
That's a good fleet. It's a good fleet.
For sure. All right, operating costs. So is this just strictly electricity? This is the 8 cents per kilowatt hour over the 3-year lifespan that we laid out.
Yeah, I think there's another down below and we'll break it out, but I think there's another one
Okay.
that factors in like I think like a small little maintenance percentage and then
Okay.
the pool fee as well. But I believe that operating cost is
Makes sense.
specifically the energy costs over time, over the
Got
2 year,
it.
3 year period that you picked.
Makes sense. Okay, cool. BTC holdings. So at the end of this 3-year period, then after we've paid off all of our costs, we are holding on to a little over 2 Bitcoin.
Yep. Yeah, correct.
Got it.
That's what you've mined over that period that you selected.
Okay. Interesting. Okay.
And then that USD value, that's the actual Bitcoin value, assuming the growth rate that you selected on that Bitcoin price. And then it's just multiplying that by the total amount of Bitcoin that you've mined up to date.
Got it. Okay. And then 8.7% CAGR. Is that, I'm guessing this CAGR is just a return on our capital investment here.
Yeah,
So
just
it's the
compound annual
difference
growth
between,
rate on the whole thing, all factors included.
got it.
So I believe it's
Is,
on
is
that.
that, would that be factoring in the tax savings then as well, or no? Because then if we have the CapEx here, but if we subtract the tax savings, I don't know. This is 248 to 318.
You've got the operating costs as well in there that needs to be added on that CapEx.
Got it.
Yeah.
Okay.
So then, yeah, so if you go down a little bit here, this will break it down a bit more.
Okay.
If you hit that 2026 initial investment in operations, you can break that down in year one. That table above does it as well. This is just a little bit cleaner of a breakdown. So you've got your expenses. You can
Okay.
see here capital expense for the mining equipment, and then your revenue there is your actual Bitcoin earned in dollar terms. And then that's just showing, assuming the value of that after the first year. And then your operating cost there is your energy fees, maintenance, pool fees, all that stuff included. And
Mm.
then equipment sale revenue, I think you selected it's been a minute since we were on that page, but since you selected the upgrade package, I believe,
Oh.
that, that is the equipment sale revenue estimated at the depreciation rate that was selected. And then you've
Mhm.
got your tax added, your tax benefits as well. And then net cash flow year one. So if we go down to year two, we can break that out.
Got it.
And then it's just year after year, it's those same things. And then it gets you, then this is just a breakdown of like what the numbers are expected to be based on your parameters.
Okay. I gotcha. All right. Interesting. Okay.
And so, yeah. And again, like this is a model, like there's a lot of different ways you can do it. We're not promising you anything. Like this is hopefully just a tool
Yeah.
that our team spent a lot of time on to make as accurate as possible. It accounts for the
Mm.
halving, right? So like this is now on a 3 year horizon. So you have the halving in play there. So I bet if we did it on a 2 year period, I bet that CAGR is probably higher because you're getting everything in before that halving. Who's to say where price will be? You can also do the bull market case like you were thinking about doing earlier to see what that plays into it. You do the bear market case, right? Because that's always an option, and it always needs to be considered if you're doing things responsibly. We always tell people like do all scenarios, like be happy with a medium, and then maybe we'll talk. Um, so I guess any other questions here on this stuff? Like we kind of walked through each of the steps. I think
Mhm.
hopefully people can reach out if they have additional questions on the calculator as well. Happy to answer those.
So let's run through another scenario just to see what that looks like. And we can go through this. So active income, we'll just go quickly here. Let's do a little bit higher a
Yeah,
tax
yeah,
rate. So let's say somebody's at a higher tax rate, 35%. That's obviously going to help them on the tax side of things, and that's probably what you guys see more typically as people who are do have a heavy tax burden. They do have a high income, and they're
yes.
trying to offset that. Maybe even let's go as high as 37. How much do we plan to invest? Let's do the same 250, and then lending we can still leave that off for now. Um, what do you think is best here? Maximize
I would go maximize
BTC or
Bitcoin. That's what most of our clients do. Most people they want to hold for the long term.
got it. Cool. All right. So investment time horizon, 3 years. Stick with the 3 years.
Yeah, let's go 3 years, and
3 years. All right.
let's include that.
Include that. Okay.
Yeah, yeah, let's stick with the upgrade package, and
All right.
then
Let's do the bull market.
the
Let's
bull
see what
market.
that
Yeah, we'll
looks
go
like.
bull market this time.
Yeah.
Yeah,
If these factors play out like we're saying, I mean, this really is. I think it's a feasible option. I don't know it necessarily. Maybe we can play with the actual cager and see what it looks like. But
yeah.
I feel like it is very possible
I
that
think
this
for
happens.
sure, for sure. I mean, especially now we're at kind of the bottom, and so while the economics may be tougher now than they have been previously, like, I mean, there's always your homages of like buy the bottom, buy where there's blood in the streets. That's your best time. I mean, Bitcoin mining equipment is cheaper by far than it's ever been by like a pretty good size. So you get a
Gotcha.
pretty good discount on the equipment relative to like what it was a year ago.
Gotcha. Cool. So this is assuming a 60% CAGR over the next 3 years. I'd be curious to see what that would end up with Bitcoin price at. Um, let's see.
I
I'm not
might
even
even
going to
tell
try.
you in the model if we push through there, maybe do some envelope math real quick. If not,
Got it.
but
Yeah, because I feel like that's possible, for sure, and not crazy. I mean, we've seen multi-100% moves in Bitcoin bull markets, which could easily come out to a 60% CAGR. We've got the 35% hash rate growth, which to our point earlier, if the kind of ideal Goldilocks scenarios plays out for Bitcoin miners, this might be a lot less, but it could even be negative or maybe flat, also. So we'll leave it there for now, and but people can play around with that depending on what they think might play out here. So let's calculate this one and see what comes out here. Um, see what we got. So obviously we have a higher tax savings because of the 37% bracket that we input there. So people with higher income, higher tax rates, they get better tax savings going this route. So that makes things look a lot better for sure. Same capex, we left it the same. The operating costs appear to be about the same, if I remember correctly from what we saw before. And now at the end of our 3 years, we've kept all of our Bitcoin that we've mined, so we're at 5.6 Bitcoin
so
versus what we were at two before.
big difference now on the Kager because of that Bitcoin value has appreciated. And I think that's why a lot of people choose that maximize your Bitcoin strategy because I mean, a lot of people, I'll be honest, are estimating that Bitcoin in the next 5 years is going to have a pretty sizable return relative to
Sure.
everything else. Um, and yeah, you can see, I mean, it's reflected in kind of that compound growth rate. So yeah,
Totally. So the idea here then is okay. Now I'm paying my OpEx out of other capital, basically. So this operational expenses that we're seeing here through these 3 years would have to come from somewhere else. But the benefit is okay. Now I have a lot more Bitcoin that, if we're in a bull market, is growing at a much faster pace
yeah,
um, than otherwise. And so now we have ending USD value. This is the market value of our Bitcoin at the end of the 3 years. Am I understanding that correctly?
correct. Yeah, that's your
Sweet.
total end of the simulation here 3 years later value of all the
Cool.
Bitcoin you find. And then
Awesome.
I was going to say one other thing too. Oh, so if you look at the tax savings too, we were talking about earlier, upgrading your equipment to kind of take advantage of those tax situations again. But if you'll notice year two, year three here, there's $0 for those sections. These are essentially
Oh,
right here
okay.
in the middle there. Yep.
Yep.
So you can put additional capital in if you want to, offset another amount. If you sell that equipment, put that or roll that into new equipment, you wouldn't essentially be taking advantage of that tax again. But you said you can always buy more equipment if tax goals are what you're aiming for again. You can also expense the energy ideally, year over year.
So basically, so we get the initial tax savings, but if we continue to buy more machines, obviously on the in the subsequent years, we can get additional tax savings. So theoretically, we could take some of this Bitcoin that we mined, some of the profit that we've made, since we have a positive net cash flow here year over year, we could reinvest this back into miners and get another tax benefit year two, year three. Um, if that's really what the goal is of, it sounds like some of your bigger clients, that really is the goal rather than continue to hold the Bitcoin, which could work out. It kind of depends on what your future expectations, I guess, are of Bitcoin price appreciation. If you feel like we're deep in the bull market, and you would rather get the tax deduction rather than hold the Bitcoin, I feel like
Yeah.
that could work out well. So, um, obviously, what we're changing here is, to your point, the big variables are Bitcoin's price increasing much faster than the difficulty of the network. And so if that happens, then you can get a, substantial benefit or performance or profit on the Bitcoin mining investment. I mean, we're seeing an 80% CAGR here, whereas we assumed a 60% on just buying and holding Bitcoin. So we're getting a higher compound annual growth rate than the buy and hold
Yeah.
approach of just buying spot. So, it can work out in those favorable conditions to be a substantial, you know, good, great investment, I guess, is what I'm seeing here.
Yep. And yeah, and if your initial goal was to just offset taxes, I mean, this is amazing because you now also have this seemingly great investment on top of what your initial goal was, which was just to get your tax burden to zero. And
Yeah.
that's what I try to focus on when talking to people and just explaining this because I think there's a lot of people out there in the world that have zero idea what this is. So my goal has just been like getting on a bullhorn and getting people to understand this. It's why we built the calculator to just help people understand like what's possible with this. And so,
Yeah.
it's been cool. Most people still, don't understand tax loss harvesting. It's like we have a long ways to go. There's a lot, of people that really don't understand how many awesome tax benefits there are to take advantage of here. So,
Yeah.
but
Oh, for sure. Yeah, no, that's I mean, I really see, like, if you're able to convince people that would have all, put the capital into real estate to go this route. I mean, I feel like there is a really good argument there when you're comparing those two, because of all of the things that we've mentioned earlier, but then the potential profitability of the investment itself. I mean, yeah, you get the depreciation on the front end, but you also have a much better performing asset in Bitcoin rather than holding a building or whatever else it might be. Obviously, there's no guarantees of that, but if the historic performance continues to play out into the future, I would be willing to bet that the average rental property that you're going to go buy to try to save on taxes is going to be outperformed by Bitcoin. We'll see if that ends up happening, but I feel like that's a decent bet over a long enough time horizon, in my opinion.
yeah, yeah, absolutely.
Wonderful.
It's
Well,
cool.
go ahead.
No, I was gonna say it's a fun model. I mean, it's been cool. I mean, my background wasn't really in engineering or yeah, there was no degrees in Bitcoin mining, but I'm here now, and it's been really cool to learn like all these different taxes. I've learned a lot about taxes just from being involved in Bitcoin mining. So, and I think what you're doing great. Your podcast has been great. I enjoyed listening to some of your other episodes. So I think it's super educational, and I think there's a lot of stuff here that's becoming accessible for like so many people. I mean, so many people get involved in this, get involved in Bitcoin. Like that's what we're all here for. So
Absolutely. Love it. Well, anything else that you would add, Wayne, just for the people listening? I mean, it can be kind of, again, talking about what you guys do and where to contact you, or if there's anything else before getting to that you would just want to make sure you mention to people that are considering a Bitcoin mining investment.
yeah, if you're considering a Bitcoin mining investment, I would say the best advice I can give you is to visit your site that you're considering investing in. We
Okay.
offer that to everybody. If your mining operation doesn't offered you to come visit and see it in person and shake somebody's hand, maybe a flag you should consider. That's
Sure.
usually the best way to stress test like where your money's going. I would say that's advice I've seen so far. But yeah, you can reach us megawatthq like headquarters.com. Our calculator that we just walked through is on the website. There's a contact form at the bottom that'll go to one of our team members, or you can reach out to me on Twitter at StaleShare. Silly name I made on X a long time ago, but or LinkedIn at Wayne Highfield. I'm there as well. Happy to talk about Bitcoin mining or really anything else. So
Awesome. Love it, Wayne. Well, I appreciate your time today. Appreciate you joining the show and sharing your expertise with everybody listening. Yeah, if you're interested, reach out, contact him. Go Hoosiers. Yeah, I love that you guys are in Indiana. I wasn't aware of you guys for quite a while. I think it may have been Arniel, or maybe somebody else maybe mentioned you guys. I can't remember, but I was like, oh my gosh, there's a Bitcoin mining company in Carmel. Like, for those that don't know, I'm from the area.
yeah,
Um, lived there for a long time, now live in Colorado, but it was just cool to hear because I had only ever heard of other Bitcoin mining companies being, Iowa or Texas. I feel like those are pretty common places. And then to hear Indiana is just, you have that sense of pride of where you grew up, no matter what, never leaves you. Um, so,
absolutely.
so I love that. Love that. Awesome. Well, thank you again for your time and really appreciate it.
Thanks, Mitch.
Thanks for sticking around to the end. I greatly appreciate it. I'm Mitch, the founder of Strong Wealth, and we help Bitcoiners retire early and stay retired without sacrificing their peace. If that interests you, head over to strongwealth.net to learn more about us and our services. And don't forget to subscribe to the show. We really appreciate you watching all the way through. I'll see you in the next one.